Hi everybody, my name is Michael Kim. Just to give you a little bit of a background about myself, I've been in Subto for a little over 4 years. I'm probably in everything that Pace Morby has ever started. I'm in Gator, Top Tier, Owners Club. I've probably been inside about like 1,000+ transactions. On closed ones, probably around a little over 500. I've closed creative deals in about 36 different states. I've done virtual flipping, wholesaling, but I would say where my most time spent would be around doing creative TC work. And that's kind of where I've been able to get a lot of experience in getting into creative real estate. So I told Rob earlier what I really wanted to talk about was 2 deals, because he brought this up to me about like a week and a half, 2 weeks ago about speaking. I was gonna say no, because I don't like public speaking, but there were a few things that I kind of started noticing in Oregon, because again, I do a lot of more work outside of Oregon. I do a lot of stuff with Robert here. I've done stuff with Todd. But some of the things that I've seen like wholesalers do, working with other agents, title companies, problems you'll run into, people you're working with will tell you like you can't do this or you can't do that. I hear this a lot. So one of the things that I wanted to talk about was a deal that I closed we closed this deal in Medford, and it was being bought sub 2. It was a property that a buddy, the reason why he knew about it was he had a family member that was going through foreclosure. It was a nasty breakup, but the partner was still living in the house. He wasn't paying the mortgage. He let the dog piss and shit everywhere, so the house was just going terrible. And then he moved to Vegas. So the house was abandoned, and the family member was just gonna let it go. And my buddy, he was like, no, I don't want this to happen to you. Let me try and figure something out. So he actually had a family member that was a loan officer, and he kind of.
Talk more to the mic.
Higher?
Yeah, it's a little bit quiet. Try to get it in the back. It's fine. You just blast it right in the mic.
All right. So, is that better? All right. So my buddy had a family member that was a loan officer, and one of the things he brought up was, and this is a good way to find rap buyers too. He approached his cousin, loan officer, hey, do you have any buyers right now that didn't qualify for a traditional loan? And he said, yeah, I actually have somebody. It's actually the person that was helping him is an agent. He's a good friend of mine. So my buddy got in contact with the agent, and he kind of presented the opportunity to buy his family member's home subject to. The reason why these buyers didn't qualify, though, was it had something to do with the wife's social security, and something didn't get registered, so she needed some time to go by so she can start establishing some type of credit before she could apply for a loan. So when my buddy presented this opportunity, like, look, we can sub to this to you. You don't have to qualify for anything as long as you have the money, we'll sub to it for you for now. So what the loan officer suggested was, because the whole point was to try and get the seller clear, right? Get the loan out of her name and everything. So the idea was to place this buyer on the deed, give her about 6 months of seasoning, and then at that point, they can go ahead and refi out the original sellers out of the property. But that's when my buddy gave me a call and asked, like, hey, they want to put the buyers on the deed, what am I looking at? And that's kind of where you may lose a lot of control, right? Because once they're on the deed, if they stop paying or whatever ends up happening, you need them to sign everything over. And if they refuse to do it, you're kind of stuck. So, when he called me and we talked about it, my whole thing was like, no, that's stupid, because you're exposing yourself. So let's go ahead and do it this way. So what I ended up telling him to do is we were going to go ahead and put everything into a trust. We're going to get a trustee in place. We're going to place them as beneficiaries, but we're going to place a bunch of contingencies in place, right? Just in case for some reason these buyers didn't perform, we didn't want them to have the opportunity to stay anywhere on the trust. So working with this agent, because when you do a trust, a lot of title companies, especially if the seller is staying in the trust, they're not going to run the transaction for you, right? Because a lot of the times when people put their property in a trust, a lot of the times they'll just quit claim it into the trust because technically you still own the entity. So what ended up happening was the agent didn't feel comfortable with just doing a tabletop closing, right? Kind of avoiding, additional closing fees or anything like that. So he ended up having a title company that he worked with, and I talked to the title company. They said that they understood what we were doing. I explained the whole trust structure of what we were doing. They said everything was fine with that. But when we actually started going into it, I started asking probing questions to like, what kind of trusts do you guys close in? And one of the things she said was, well, we always close in revocable trusts. So that's when I went back to my buddy, and we were on a three-way. Escrow officer dropped the call, and we started talking. I'm like, hey, instead of fighting with the grain, they said revocable trust, let's keep it simple and just move that way. My buddy wanted to get fancy, and he wanted to do a land trust. So we just went through the land trust route. We provided all the documents to the title company, and this is kind of where a lot of the problems started kind of happening, right? So when they saw the land trust, they didn't like the land trust. So their underwriters took a look at all the paperwork, and they said that they would refuse to close on the land trust until we had it registered with the state as a business. And I'm like, it's not a business though, it's just a whole property. They're like, no, we won't do it unless you close it, or unless you register it as a business trust. So instead of arguing with the underwriters, it was just more of like, let's go ahead and run let's go ahead and run it. We'll submit everything, and whatever they tell us, we'll just take it back to them. And if we need to, we'll try and have them call the state, have the state tell them directly, no, it doesn't work like that. So what ended up happening, we submitted everything, and the conversation we had with the state was, what the hell are you doing? Like, this isn't a business, you're not supposed to register this, we don't know why your title company's telling you this, but here's your refund of your money, we're not registering it. So we took it back, and we spoke to them. Underwriter still said no. So then what we did was we converted everything over to a revocable trust, kind of like what they already suggested. So the problem that we ended up running into there was, again, we had a lot of built-in contingencies in there to have some safeguard for the seller. But then the thing was, once the underwriters started looking at all these documents, it's kind of one of those things of, we already understood that when people aren't familiar with things, it makes them nervous. And I think that's pretty much what ended up happening. They didn't like these contingencies that we had in place, so we removed them. We resubmitted. They didn't like another contingency we had in there, so we removed it. And then it kind of came to a point where we're like, look, tell us everything you don't like, and we'll get it fixed, and then we'll resubmit it to you guys. And this is now, at this point, probably 3 months. We had everything fixed on how they wanted the trust to look, and when we submitted it again, they said, we're not closing this for you. Just a flat out no. We're not doing it anymore, there's no more changes, but we don't feel comfortable, we're not gonna close it. So what I ended up doing was, I told the agent, look, we tried your way, we tried your title company, we did everything that they asked, and they still said no. You need to kind of let us do what we do, and let me just run the whole thing. I ended up taking it over to one of my escrow officers at Old Republic, Crystal Jane, and I think we had it closed in 2 weeks. So we went from 3 months of just a bunch of bullshit to moving it over to a title company that's actually familiar with what we were doing, and we got it closed in 2 weeks. So the reason why I kind of bring up like this transaction is really comes down to, you're gonna run into a lot of people that tell you you can or you cannot do something, right? But the big thing for me is, I usually will go around and I'll talk to multiple people in that general profession to try and see if I'll get the same, if the information is actually consistent. If the information is inconsistent, what I start doing from there is I start doing a shit ton of research to figure out what can and can't be done. And luckily with this situation, there was no equity in this property. Everything, all the payments got caught up, there was liens in there too, utility liens, those all got covered. But essentially this person who was gonna let this property go to foreclosure, she ended up getting $3,000 at closing, and we actually wrapped everything. So there's wraparound financing from the seller to the trust. And once they actually go through and refinance, she's supposed to be, if they actually meet the 6-month time frame, she's gonna make about 10 grand. If they don't meet that time frame and they stretch it out, she's making a little over $100 every month. So she went from facing foreclosure to making money right now. The one thing that I wanted to talk about a lot though was the trust structure. So the reason why I bring this up is if you're trying to do any type of subject to transaction in Oregon, it's very hard to find an escrow company that's going to close around a government loan. And what a lot of the times they're going to do is they're going to try and pitch you. You need to do a land contract, contract for deed, do a lease or whatever like that. The big thing for me though is I don't like executory contracts because at the end of the day, what you're really holding on to is equitable title. FHA and VA. Yeah. So, what is it? I lost my thought. What was that? Oh, equitable title. So I don't like executory contracts because you technically really don't own the property. You have an equitable interest in the property, but the seller still holds fee title, right? So if, for just as a scenario, if you're looking at a foreclosure situation, they might not have the they don't, I don't want to sound like a dick, but what is it? They might not be very good with their finances, right? So you might alleviate a pain and you can catch up their arrears. You guys get a land contract or a lease option or whatever in place. You can file a notice on the property or whatnot. But at the end of the day, if something else ends up hitting that seller, say a credit card judgment for $20,000, once you try to transfer that deed over, of course they're gonna go ahead and pull title, right? What ends up happening from there is once they actually do that title report, that judgment's still gonna pop up. So until you can actually clear that judgment's gonna stay there. So now you just inherited another 20 grand debt. This is why I don't like executory contracts. If you have the money and you're okay with the risk, then do it, because it's simple to do. So what I started thinking about is more of the trust stuff. And I actually did something like this in Georgia with attorneys, and they said by case law, it fixes a lot of stuff, right? So the reason why I started looking into trusts, and I've been talking to attorneys out here, Dole of Law, Eyal, Eleanor. So I've been talking to them about trying to structure something different, because the stuff that I did in Georgia, when we put everything into a trust, there's multiple things that it ended up covering. It is more expensive. There was a monthly fee to pay the trustee, because we had an attorney as a trustee, neutral third party, right? Especially when you're gonna be placing a lot of contingencies in place and someone needs to act. I would rather pay an attorney to handle everything than having to go to court and be, conflict of interest. But if you structure these trusts correctly, what it ends up doing is it does alleviate a lot of pain for due on sale. It also, I would say due on sale is the biggest thing I would say it kind of covers, because I feel like that's what a lot of people end up worrying about. But then what I also kind of wanted to talk about was, and this is going to go hand in hand, right? So I've been seeing a lot of wholesalers in Oregon doing this, and I know other people in other states handle it this way too, but what they'll do is they'll have the seller set up a trust in their name, close it, and then have them assign the beneficial interest into to the investor, right? And I'm pretty sure a lot of people have heard about this. So, and I've talked to multiple attorneys about this, right? And the one thing that always comes up is when you're blatantly trying to hide something from a lender, mortgage company, what you're essentially starting to breach into is mortgage fraud, right? It's kind of the same thing when you're doing loan modifications. It's supposed to benefit the seller, but essentially what you're doing is you're coaching the seller to do something they're not supposed to do, and they're lying on the application in order to get the modification to go through for the investor to take over, less money out of pocket. It's the same thing when you're buying a trust that owns a property. You're buying the beneficial interest, but then the whole thing about that again is you're hiding something from the mortgage company. So at least with the attorneys that I've spoken to, this is the one thing that's always talked about is that's fraud. You're hiding something, you're deceiving the mortgage company. So kind of going around the trust structure that I ended up learning was you're leaving the seller inside of the trust, right? You're stripping them from a lot of like, what they kind of labeled the seller was like a 10% non-investor beneficiary, right? They don't really have any rights to the trust, but for some reason, if anything came up with the mortgage company and you have to give them a certificate of trust, it still shows that the seller is part of the trust, right? But then the other thing too is it's the due on sale, and then I'm drawing a blank here. There's one other thing that it also helped out with. I'm gonna just leave it at that. The trust. And again, the reason why I think that's the biggest thing is, again, this is what it is. So you guys have probably always heard, right? When you're pitching the sellers, they're like, oh, what happens if you don't pay? Have you guys heard that? So here's the thing, like, it's not that easy. If you sub to the property, even if you have like wraparound financing and everything, if the investor doesn't pay and they don't give you a deed in lieu or something, you're gonna have to foreclose on them, right? But then the whole thing with the trust structure is, and again, this is like specific contingencies that you're placing in the trust, is for some reason if this person doesn't pay, you're kind of structuring it like wraparound financing. Hey, I have no rights to I'm not gonna benefit anything from the property, I am a 10% beneficiary, but for some reason, if you miss this payment, I'm gonna go through the proper process of, notifying you of the default, and then also notifying you of the cure. And you're including your trustee in all these emails so they can see the communication that's going on, right? At a certain point, if they don't fix the breach of contract that you guys have in place, at that point, the trustee has authority to remove you out of the trust. So it's another pitching thing that you have for a seller of like, hey, you can eventually end up taking everything back without having to go through and foreclose on me. So that's kind of really what I wanted to touch on is the trust stuff, because I've been hearing a lot of wholesale companies all over the US talking about doing the land trust and then just assigning the beneficial interest. The big thing, and you can go through like, what is it, the free Creative Finance Pace Morby group, you can find a lot of threads in there where people talk about, hey, I think I've done this properly, I put it in a trust, but guess what happened? I still got a due on sale. Putting a property in a trust doesn't save you, it's how you structure it that's gonna end up saving you at the end. The other thing that I really wanted to touch on too, and this is probably the last thing that I really wanted to bring up, is knowing who you're working with, right? So the one big thing that I always run into is, I actually had a phone call with an investor in Idaho. He's trying to buy something out in Westland, and we're talking for a while, but he does a lot of business out here in Oregon, and he got my number. So me and him are talking, and one of the things he told me was like, hey, I talked to my escrow officer, and they told me everything that I'm trying to do is illegal. So, and that's kind of where whenever I hear something from somebody, I don't take it I take it for like what, face value? Like I'm not 100% going to believe you until I can see everything in black and white. I mean, for me though, at the same time, I'm still looking for all the loopholes and the gray lines. But essentially, when I hear somebody tell me that I can't do something, I want to know why. And that's the one thing that I always run into with like agents and escrow officers is they tell me it's illegal, you can't do this, and I ask them why. And they always go through like, what is it, the deed of trust of the mortgage deeds. Hey, they have contingencies in there. this is what I've always rebutted with agents and escrow officers is, hey, that's a contract between the seller and the mortgage company. And at the end of the day, when you're violating something that's on a contract, that's a breach of contract, and the mortgage company has rules built into these deeds, they like the acceleration clause, they're due on sale. But it's not illegal. It's, again, just a breach of contract, and they have their remedies to fix it, but for at least on my side, as an investor, I have a way of fixing the due on sale too. But yeah, I think that's the biggest thing that I really wanted to touch on was, I understand if someone's been an escrow officer for 30 years. I understand if an agent's been an agent for 30 plus years. But at the same time, it doesn't mean that they know everything. And I'd always say, if you hear somebody saying that you can't do something, I'm gonna go through and I'm gonna verify it with multiple different people that I know that have been in that same space. But yeah. Yeah.
Wait. I wish we had a microphone. I would just repeat the question when people say it. All right. I guess we're ready for Q&A?
Yeah.
We're good? All right, go and tell them.
Any questions?
Hit them up.
And maybe this is a good question for an attorney, but what does it cost roughly to do the trust structure like that, to pay somebody to set up the trust and for them to be a trustee and keep the seller in as a minority?
You're standing next to one of the attorneys, but I'm gonna say they all run a little bit differently, right? Because again, I think this is where I tell everybody to be a little bit more open. You might spend money up front, but it'll probably cost you a lot less to set it up front than it will later. Like the person I spoke to in Idaho, I went through the whole process with him too, right? And he obviously did a lot of his own homework, but at the end of the day, he's like, look, I would rather make sure I get everything done right now so I don't have to spend another 10 or 15 grand later. But I would talk to them. Any other questions?
Process. So let's say I find a substitute deal that I want to take on, potentially. I'm going to call you first and tell you kind of how I want to underwrite the deal, or having never done one yet. What would be the best?
So, if you found a property that you wanted to take over sub 2, the first thing obviously would be to talk to the seller, right? And if they're already at that point where they're agreeing to how you're going to structure it, the loan's gonna stay in their name and they're completely okay with that, obviously you need to go get a purchase agreement. I'd also ask for their mortgage statement, all that stuff, how much do they owe on the house, so you can create your purchase agreement. But the upfront part is pretty easy. It's if it was just a straight sub to you, what's your outstanding principal balance? And that's what goes on your purchase agreement. But once you have an executed contract, at that point, we're just going through an opening escrow.
So I'm just calling you at that point.
I can walk you through it. What was that?
What would make you want to do a sub 2 instead of a wraparound?
So
Repeat your question.
what would be what would make me want to do a sub 2 against a wraparound? So when I say sub 2, when I mean sub 2, I'm also including wraparound financing, right? So obviously it's to give protection to the seller, right? And again, selling point for when you're trying to close the seller. But it also gives them that security that they need in case you end up defaulting. My whole thing is when I start thinking about situations, because sellers sometimes have remorse of actually sub-2ing their property to you, it's making sure I put in as many protections as possible in place for just in case if we ever went towards like litigations or anything, I have something to stand on because I put in all the proper protections for the seller. Are you asking like against like doing like a naked sub to, like no security documents and.
No, I think it's like, to me, a wraparound is safer than a sub two because it's just like an extra piece of paper, security just indicating that basically the seller owes the bank and I owe the seller. Like that's what a wraparound is to me.
Yeah.
So a sub two, to me, it doesn't have that extra document.
I get it. So yeah, I would say when I first started doing sub twos, that was how we were doing it. I think it just kind of adapted to that sub two language now. Is when we do sub twos, it's just at least in my head, the wraparound is already there for the security. So I get what you're saying though.
Thank you.
Yeah. Any other questions?
Why are wholesalers putting properties in a trust? Is it to get around like the disclosure factor to the seller, or is it just the legality in Oregon to get around the registry?
In all honesty, whenever I hear about sub twos, I think the biggest concern is the due on sale for a lot of people, and for a lot of investors that I spoke to that put properties in land trusts, they think it fully secures them from being called due on sale. Like I always get, oh well, the Garden Saint Germain Act, and I was like, what does that have to do with anything? Because at the end of the day, the seller signed a document, right, with the mortgage company before they ever put it into the trust. So they're obligated as a seller, if you transfer something into an entity, if they're asking you for those documents so they could see that you're still part of the trust, they can request for it. And if you don't want to show it to them, they're still going to accelerate the loan. But that is the big reason of why, to me, it's a false sense of security. Hey, I'm going to put this in a trust so you can buy it sub to and you won't get a due on sale.
Let me talk a little bit about land trusts. Land trusts do not work in Oregon. About 15 years ago, there's 3 or 4 major title companies, and they became, one of the big title companies became concerned about land trusts.
How did it sound, man? I felt very stuck.
Sounds
so good.
Really
good.
Didn't seem quite right. And
I feel like you're bullshitting me.
When people have questions, just have them talking to the mic. Nobody can hear.
Got it.
And then have them get back to it.
Okay.
Yeah.
Well, it was just a matter of weeks before all the other land, all the other
Awesome.
title
It
companies.
was really good.
in
You're gonna like the
state of
YouTube.
Oregon
It's gonna
took
be
the
good.
same position. So, land trusts seem to work in almost every other state, but they do not work in Oregon.
Any questions?
All right, Mike, question for you. Due on sale, I get a letter in the mail, due on sale. How do you fix the due on sale?
I think the easiest way, this is one of the things that I always tell people, have a good relationship with your seller. I don't know how many sellers I've talked to and I've told them, hey, we're gonna be best friends, we're just not gonna talk. Because I might need something or you might need something in the future. You might wanna buy a house just how I'm buying your house. But I know a lot of people use power of attorneys, but the due on sales that I've worked on, I've actually worked directly with the sellers when they've happened, and you're pretty much unwinding the whole transaction, right? And you can go the trust route. I know for some people that want to keep it super simple, what they're doing is they're going the executory contract route. They're doing the land contracts, they're doing the contract for deeds, lease. There's a few people that'll do a lease option. And again, they'll go ahead and record notices and stuff like that, but then you're still exposed at that point. And again, that's probably where I would go, is I would just unwind it and put it in a trust. And any times I've talked to mortgage lenders and we're doing it that route, I don't tell them certain things, but when I go through and execute it, obviously they get the end result, they get the certificate, they look at it, all right, cool, do I need anything? No. All right, high five, like, you're good. It's a lot more simpler. I know when you actually get it, it's a lot of anxiety, like, holy shit, I'm about to lose my asset. But again, it's more simpler than people think. I think just a lot of people live in that fear. And, you know, and I talk about this a lot too, because I hear, Rocket Mortgage come up a lot, like, hey, you can't sell. I've done a shit ton of them, and I've never had a problem. I did have a due on sale, but it got fixed within 30 days. But that was one out of I don't know how many rocket mortgages I've closed on. And I feel like it's more of a fear thing that people try to sell so they can, again, provide services to you. But it's not that bad. If you're not nervous to talk to the mortgage company, again, you want to be very, you don't want to be super secretive, but you obviously don't want to tell them what you did, right? But they're super informative of what you need to know and how you need to get it done. I think when I worked on the last due on sale, they told me how to do everything. I'm like, how do you want this to look? They gave me a little cheat sheet. They're like, hey, it's only 3 things you need to touch on. All right, cool. Handed it to the attorney. This was out in Tennessee, but handed everything over to the attorney. This is what I want the trust to look like. Got the certificate, submitted it to Rocket Mortgage. They said, all right, everything looks good. All right, cool. And it was done.
Mike, what happens when the owner dies?
That sounds like a you question.
Well, yes, I do a lot of probate, and I could let me throw out a couple of challenges, because if an owner dies and they will their interest in the property to say their son, then you're starting to deal with the son. I have not done one of these transactions that you're talking about where we've had a person pass away, but I'm just asking if there are any special concerns that you might have with respect to a person, the owner passing away.
Oh. So I'm probably just going to repeat the same thing that Pace always says about if someone passes away on a sub-2 deal, just keep making the payments. Make sure you have your power of attorney documents, all the information you're going to need, just in case the servicer changes and you have to call the new servicer. Just make sure you have power of attorney and all the seller's information so you can get access to the portal again. Yeah.
The one that you did have to unwind, did you buy it or did you kick it back to the seller?
The what?
The one that you did have to unwind, did you buy it at the end or did you kick it back to the seller?
Oh, that wasn't my property. Someone actually reached out to me because they ran into that issue, and then I unwound it for them.
Did they buy it?
Oh, it was their property, yeah. No, so they originally bought it sub-2, due on sale happened, and then we wrapped everything into a trust right after. Like when the due on sale got called, then we wrapped it in the trust. Thank you.
All right, I'm scared. I'm talking to a seller, and I'm worried about doing the paperwork and getting it all done right. Could I call you to help me get the paperwork done and handle the whole transaction for me?
Yes.
How much will it cost?
Ooh, that's a great question. How much will it cost, Mike?
A lot. No, it really just depends on how creative you're getting. If it's super simple, it won't cost much. I'd more say just give me a call. I'll give out my number, but yeah, all you need to do is just give me a call. We can go over your transaction. If it's super simple, it won't be that bad.
Is there any other title companies besides Old Republic? Is there any other title companies in the area that will honor a creative deal?
I think that's really going to depend on your escrow officer. So again, the big thing is with Oregon, I haven't found a lot of title companies that are still they'll do the conventional loan sub-2. They won't touch VAs or FHAs. And the ones that would, they don't anymore. And I will say we had one in Seattle and they've completely stopped. And I am gonna say I think some of them got run pretty ragged because kind of sometimes dealing with wholesalers, you end up getting like 20 contracts, they put in a shit ton of work and then one goes through. But yeah. Any other questions? Oh.
How are you setting it up for if there's a seller wants to buy right after so it doesn't affect their debt to income ratio?
The what?
How are you structuring it if the seller wants to go buy something right after? Because doesn't it mess with their debt to income ratio if they're selling it sub-2?
So I would say this is more. So anytime I've had this situation happen before, because the last one I did was in Washington. She had a VA loan. Her VA loan was maxed out, and what is it? She was moving to Virginia, but she kind of already knew, since her VA loan was tapped out already, she went the FHA route, and she got approved, but then that was her issue, was the DTI. So what we ended up doing was just structuring a lease option, and once everything got approved, and she actually moved into the house, had the keys and everything, we exercised the option to purchase up to right after that. But this is where I always tell people, the best person to speak to, like if you had a seller already working with a loan officer, you need to talk to that loan officer, because you need to know what they need to see in order for the seller to qualify. And there's Todd over here too, so. Any other questions?
How do you set up the documents to where you actually protect the seller in a situation? Because a lot of people that we're talking to trying to pitch these on, that's a major concern. Like, how are they protected in case, like, say I find something, and how do I protect them in case I default or I get abducted by aliens?
So, and I think that goes back to the whole trust thing, right? If you're trying to have like a non-friction closing, I would probably more than likely go the trust route of letting them know, hey, we're going to be a part of the trust. You're not going to have you're not going to benefit from the trust, but where the benefit actually comes into play is in case I do get abducted by aliens, I stop making payments, of course, and then we have a trustee in place. We're pretty much at that point, you're going to notify through email or whatever, you're going to notify the trustee that I'm in default. You're going to send whatever notifications you need to send that investor. And then from that point, if that investor doesn't cure anything, then at that point, they'll end up just removing you from the trust.
You mentioned something about know who you're dealing with. So I mean, what do I do? Do I ask these people, do you have your safety badge?
So when I more of talk about, knowing the people that you're working with is you might meet people that seem very credible. I've been lucky enough to be surrounded by a lot of people that have worked with a lot of people that have given me great advice, and they know some of the people that I talk about, and they will give me a heads up of how the people work. But kind of what I more mean is like just the transaction I was talking about. That agent, I don't know if it was an ego thing, but it was a big thing of making sure like his sellers or his buyers were taken care of and everything. He ended up incurring a few grand more than it would have cost to actually close the property. It took us 3.5 months to close it. My attorney was, and again, this was out-of-state attorney, but this attorney had the paperwork done in a few days. We could have literally just did a tabletop closing and just been done. But the buyers ended up having to cover the first title company. They obviously charged a fee because they've worked on it for so long. Even though the deal didn't get done, they still got paid something, and then they had to pay for another closing. On top of that, the arrears kept stacking up, interest, penalty fees. So their entry fee became a lot higher than it should have been. That's kind of where I go back to is the agent wanted to show that he knew what he was doing. He ended up costing his clients a lot more money.
So if I was new here today, just came in because I heard about the event, Robert did excellent advertising, what would be my first step? What would you recommend for me to be my first step if I want to get involved with investing? If I want to get involved in bird dogging or any of the things you mentioned, Subto, gator investing, what would you recommend to be my first step?
You need to talk to people. I think that's the biggest thing because when you're new to investing, it's really hard to find where your place is, especially if you don't know what you're doing in real estate. So when I started 4.5 years ago, I didn't know anything. I saw a few videos of Pace talking shit to people and still closing deals. That's kind of what attracted me to Pace was he's relentless. Dude's yelling at him, cussing at him, hangs up on him. He picks up the phone, calls him right back, and is like, hey, I think we got disconnected. He's like, no, I'm fucking hung up on you. Click, and he'll keep calling you though. And the funny thing is, he got hung up on like 6 times, and the guy ended up agreeing to have a phone call the next day to see if they can work something out together. That just blew my mind. But I didn't know the type of value that I could provide somebody because I don't know shit. I didn't know how to do construction. I don't know anything about real estate. I didn't know how to underwrite or anything like that. But the big thing that I had was time. I haven't had a W-2 in like 15 plus years, and that's how I kind of pitch somebody. Hey, I go to these Zooms, I'm learning stuff, but I don't know how to apply it, and I ended up offering my time to, I don't know if people know who he is, but his name's Caleb Christopher. So Caleb he runs a creative TC company. Dude's like the smartest guy I've ever met, but when I was introduced to him, that's one of the questions that he asked me is, what can you provide to me? I know what I can provide to you, but what can you provide to me? And I was like, I can provide you my time. Like, I'll be the first person and the last person to leave. And he was like, well, that's really not enough for me. And I was like, well, you don't have to pay me. I just want to learn. So when he was starting his company, that was what I provided to him. I told him that I would stay with him until his company was self-running, because I didn't want to work for anybody. And I would be the first and last person to leave. And I did that for 1.5 years with him. By the time I left, he had like 30 plus employees. And then when I told him I was leaving, he asked me what took me so long. So if you don't know what you're doing, you at least need to talk to people. And you need to figure out what other people are doing. Because again, you might not want to wholesale. You might have a shit ton of money and you just want to lend money. But at that point, learn how to underwrite.
Where can I learn these skills?
You go talk to people who are doing it. You find the people that are doing what you want to do, and you try to figure out what they're either missing or what you can provide to them. I would say one of the big things, like, what is it? I've worked with a few wholesalers to close deals, and one of the things that I used to have to beat into people's heads is they would send me Zillow links. And, I'd ask them, like, did you call them? No. Well, what do you want me to do with this? It's been sitting on market for 150 days. I don't care. You go call them and see what their problem is. But, if you're trying to provide value, you have to provide actual value. I can hire somebody for $4 an hour to go pull Zillow links for me. It's not that hard. There's all these free systems and tools now where you can go through, like, what is it? PropWire. PropWire is free. You can pull a list from there. You can go on the county websites. You can pull lists from there. The real value comes in is when you actually make that connection and go, hey, Mike, I found this property. I talked to the seller. They haven't been able to sell. They moved out of state, and they're open to a creative offer, and I told them I would connect them to you. You've already broken that barrier, so I don't have to do that extra work. Any other questions?
I've heard that insurance is the #1 reason for due on sale. So how do I handle that? Like, I bought the property, insurance, I need to get in my name, but how do I set that up to where, I don't trigger due on sale?
So I have a preferred broker that I work with, and I usually only like to work with him because he understands how it needs to be structured. But the structure of a sub-2, or insurance for a sub-2 property, is pretty simple. Whoever's name is on the deed has to be the primary insured. You obviously add the mortgage company, and the big thing that you really need to do is you need to add the seller as an additional insured. So when you get all of that done, this is a secret that I learned from Rob. So when people submit their insurance declaration over to the mortgage company, because I don't know if I know some people keep like dual policies and stuff like that. I've heard a bunch of shit from like insurance brokers where you're not supposed to be doing that. It's wrong, and somehow it could screw you over if a claim ends up coming through. But ultimately, again, you don't want to pay for 2 policies, so you want to swap them out. So what you typically would do is you would call the mortgage company, and the simplest way is, how do I get my insurance declaration to the right department? And they'll give you like a fax number or email. But the trick that I ended up learning from Rob was highlight the shit out of where the seller's name is, because a lot of the times when people send in their insurance documents, it'll end up coming back and they're like, hey, this insurance isn't under this person's name. We can't take this policy. Well, what I started doing was I started highlighting the shit out of the seller's name, and on the cover letter, I'll actually put in there, hey, the mortgagee's name, or yeah, the seller's name is right here, and it's in red highlight, and I'll put that on the cover letter, submit it. I've never had an issue.
Do you ever add yourself as an additional interested party on insurance policies?
If I was the buyer,
Yeah.
no, I'd be primary.
What about third-party loan servicing?
I fucking hate them. Well, no, hold on, I'm sorry. So the reason why I'm not a big fan of third-party servicing companies is the ones that I've worked with, you obviously, like, what is it? If you owned a home, your mortgage payments don't always stay the same because your property taxes might go up, your insurance premium might change. And the third-party services I worked with, if you tell them to pay $1,000, they're only gonna pay $1,000, right? And the shitty thing is the ones I've worked with too, they send out a check, right? So if you're like, hey, make the payments on the 13th, but payments due on the 15th, and then it takes a week or the check gets lost, payments missed. The other thing too is I've run into this situation with other people where they're like, hey Mike, I keep getting hit with late fees. I'm like, why? And I'll look through the whole thing and I'm like, hey, you're sending in the wrong amount because it shows your payment was received for $2,500, but the payments are $2,600 now. And usually that's when it hits me. You're using a servicer, right? And they're like, yeah. So I don't know if anybody has servicers they work with. Well, they'll make sure like it's actually the monthly payment amount. But the ones that I've worked with, you tell them what you want to pay, and that's all they'll send. So again, if something changes on the mortgage payments, and you're sending in the wrong amount, you're going to incur late fees. But yeah, that's why I don't like them.
Doesn't it potentially help the seller's DTI though in some scenarios?
I look at it more like this, and I talked to Todd about this a few months ago too. I feel like as long as you have that wraparound financing in it, a lot of loan officers that actually understand what the transaction was, they'll take that in consideration. Like we had a seller in Las Vegas. He's trying to pull out a HELOC in his new home in Arizona, and the whole issue was, his DTI. So he had to come back to us, and we're like, no, we have the documents right here. We sent it over to him, and his loan officer took a look at it, and it cleared him. No questions?
Mike, when you give a due on sale, from that time, what's the time frame we're supposed to execute? Is there a time frame on that?
So usually it'll say like 30 days respond. So if you get a due on sale letter, it'll tell you on that letter like, hey, you have 30 days to respond. The deed is in this name. Pretty much it's saying, tell us what happened. You have 30 days to respond. No, there's a huge process, right? So it's the same thing with like a foreclosure. If they're accelerating the loan, you have time. You don't have, it's not like, oh, in a week you're losing the house. So you have time.
All right, so are there certain loans or certain banks that I should stay away from when doing subject to transactions?
Credit unions. Credit unions.
Why?
Can I talk about that one? So I was working on something with Todd, and they had it was a Subto transaction. First was conventional, second was a credit union HELOC. And they had a buyer in place, and I had a whole conversation with the buyer too, like, hey, typically it's not something you want to deal with. There's, they service everything in-house. Even if they sell the debt, they're still servicing it. So what is it? This property I think we did like 4 months ago. I think it took the credit union like 3 months to send a letter out. But again, this is something that I prepared the buyer for. Look, you can either clear out this HELOC now, or you can wait till they actually find out. So it'll buy you a little bit of time if you don't want to clear it out now, but make sure you have that money in reserves. She ended up getting a due on sale. Pretty much, hey, this transferred over, what's going on, let us know what's happening. But again, she was prepared for it. She knew all that she needed to do was go ahead and pay it. And from what I understand, that's what she just ended up doing. She just cleared it out. So the reason why you want to make sure you don't slack on that is because if that second position does get to a point where they file, then what ends up happening from there? They have to start notifying everybody else that's recorded against the property, which means now the first position mortgage now knows what's going on. So now you don't have one problem, you have multiple problems to deal with.
So I'm brand new. I came to the meetup in February, and I've been bird dogging hard since then. Still don't have my first deal. And I feel like I've taken like every class I can take from PACE that's free, that I haven't joined Sub 2. But I feel like there's this huge block of information that I don't have access to. Because I'm like, I can bird dog, and I've got several buyers that I'm looking for places for. But once I have that information and I give that to them, I'm like, what do I do now? I've signed NDAs with a couple of my buyers. I trust that, when they finally take the jump and buy one of them, I'm gonna get money eventually. But I'm like, how do I know I'm getting money somewhere? I feel like something's missing in either my information or my execution.
What market are you bird dogging for?
I live in Salem, but I'm bird dogging primarily in the Portland area, Salem area. I have a Midwest buyer now, and then my daughter and son-in-law want to buy in Boise.
What's your buyer's end-use intention?
Sorry?
What's your buyer's end-use intention?
End use, fix and flips.
Okay.
How many wholesalers have you talked to?
Yeah, how many
I don't know. I mean, I have some, and I don't really like them because they're not very nice.
to what
They're
extent?
like corporations, and they want to meet me in person before they are willing to give me information. And the whole point is, I'm in a chair. I can't go to a lot of places easily.
A lot of them are.
Sorry, what?
To what extent are they having you
I would
underwrite
just be
the
signing a JV agreement.
What information are they needing from me?
You know what I'm saying? So to what extent are they having you underwrite the properties that you're looking for?
I'm not sure what
I feel
underwrite
like I
means.
sound like
except
dumbass.
in regards to loan terms. I'm giving them, I'm searching, like every website under the sun, but I'm looking for places and I give comps.
talk to Brian? Did you talk to Brian?
I know budgets and aftermarket.
His sister's friend
That's underwriting.
told her
underwriting.
6%.
You're underwriting the address you're looking for them. So I mean,
So far, the only thing I haven't done is call the business number.
Yeah. I told him, I was like, dude, why don't you just call Danny? He was like, oh shit.
Information of what bird dogging is.
Like his whole family's trying to sell. Sounds like.
Yeah.
Okay, so bird dogging is when you're finding wholesalers, like Todd. Where are the wholesalers? We have some wholesalers here. We got Todd. Oh, we have a lot of wholesalers. Okay, keep your hands up so people can see the wholesalers. Okay, so wholesalers still keep your hands up. I want to make sure everybody sees. Keep your hand. All the wholesalers. Okay, now bird dogs. Go ahead and put your hands up, bird dogs. Okay, we have several bird dogs here. So what bird dogs are doing is that they're connecting with wholesalers and they're helping them find buyers. So basically, the fix and flippers, that's what a bird dog is. You're the go-between.
yeah.
My advice to you, which we did on email, but I'm going to share it to everybody else, is if you're having a difficulty with the buyer, like if you're, whoever you're bird dogging for, if they're not buying, they either might not be a real buyer,
Right.
so that might be the first issue. If they're not actively buying, it's like I'm buying, but I have 2 flips going right now. I will be looking for another one, but I'm not buying like 5 houses a month or anything like that. So like once I get my house, then you know you're looking for stuff for me for lack of better words, it's just a waste of time. It's wasting your time trying to find new opportunities. So you need to expand your buyer pool, find more people, and make sure they're actually buying. That's all part of the vetting process. Because there's a lot of wholesalers, okay, not you, Todd, but there's wholesalers out there that they pretend to be buyers. They're telling everybody they're a buyer. They're not a buyer. They're just a wholesaler. They work with buyers. So that's my advice to you on that one. But there are some people here looking for bird dogs. I know Shaw is. Shaw's one. Do we have anybody else here that's looking for bird dogs? Okay. So keep your hands up. So we want to make sure that you guys connect. So Ann, you definitely want to talk to Shaw. You want to talk to Kelly. You want to talk to what? Zephyr. So definitely hit him up so that you can find better buyers on that end of it. Awesome. All right. You have Mike here. He is an expert in creative finance. Do we have any more questions? Like literally he can help you solve any of those problems that you have right now. So do we have any other questions? We have what, bird dog inspections? Any other questions here for Mike though? Oh yes, here we go. Come over, bring me the mic.
Hypothetical situation, you're pitching a married couple going through a divorce on subject to they hate each other's guts. Is there an example you know that you face in your situation? Would you try to keep them both on the deed? How do you keep both individuals in the picture so that you can get a subject to transaction worked out?
No, Andrew, is that, are you asking for a friend?
Well, I'm trying to get a house.
So I think it really depends. If they've already got the divorce in place, obviously they get that, what is it, the divorce decree that kind of labels out what needs to happen. And this is where it ends up getting really tricky, right? Because if there's a bunch of equity in the property, then it might turn into like who gets the payments, right? But then I've been in those situations where they don't like each other, but it's like, hey, how do you guys want to split the payments? Is it supposed to be 50-50 or how is it supposed to work? But I've also been in those situations where the wife doesn't want to sub to you, but the husband needs to sub to you. And I've had those conversations with the spouses where it's like, hey, you know he's not paying, right? Like, I mean, if you want to take over the payments and move into the house or try and sell it, you're more than welcome to, but he's already had it listed, it hasn't sold. And like, this is the only option. Your credit's getting crushed right now. I'm willing to take it over. I'm gonna catch everything up. This is what we agreed to. You guys are supposed to split the cash at close 50-50, but it's either we move forward or we don't. At that point, I'm just super transparent. What's working for you? What's your plan if I don't take it over? Wait, say that again?
So Pace talked recently about selling your property sub to your heir before you go. And just to have everything set up beforehand, and I understand maybe a POA would help with that too, but do you know anything about that?
I think that's really gonna depend on how you end up closing on your property.
Well, no, it's a property I already own.
Well, so how I would look at it is if you're trying to pass on your properties to your heir, and I don't think it really gets too creative. You put it in a trust and you list them as a beneficiary on the trust. I've seen some LLCs where they have different what do you call it, contingencies in place too. What is it? Me and Robert, the land deal that we bought. So that land deal, it has specific like provisions in there talking about, hey, if a partner passes away, it goes to their next of kin, or you have 90 days to buy them out. But I would say the simplest, more traditional route would just be put it in a trust.
How difficult is it to deal with probate issues without a will? And is that something that can be handled in sub 2, or do you need to get lawyers involved?
I think that's like a Dave question again about probate, but I've worked on probate stuff. Are you talking about specifically buying it sub 2?
More just advice to a friend who's going through the situation. Advice to a friend who's going through the situation.
What's the situation?
His brother passed, and there's no will, and there's a property involved.
So I feel like if you'd end up going through probate, they're obviously going to go down the family tree to see who his next of kin is, right?
Probably, yeah. But doesn't probate require that you sell real property?
No, so what is it? Like I was talking about if you were trying to buy it sub 2, right?
Yeah.
So I've worked on properties in different states where the seller has passed away and they put in a personal representative in place, and we still have bought it sub 2 from the representative of the estate.
Okay. I had a question too, actually, real quick.
So underwriting question, if you're going in, because I've run into a lot of sellers that might be interested, but they want, a price quite a bit above market. Are you buying above market? Do you have like a limit that you'll go above, or does it depend on, deal and rate and everything like that?
I think that really depends on your buyer. Because I know with like Pace, as long as it cash flows, he doesn't care. And I think that's where a lot of people are at, but then everybody has their own risk tolerance too, right? Like again, if someone was worried about a due on sale, they might want to buy the property with some type of equity in it in case they have to refinance, right? Because they might not want to have to jump through the hoops of unwinding it, putting it in a trust, or doing executory contracts. I think, again, it just depends on your buyer. Or if you're the buyer, you need to assess your risk.
All right, thanks.
All right, I got an on-market deal I'm looking at, and it means a lot to me because I own the neighboring property, and then if I get this one, then I can split up and have a couple more lots in a prime place. So I've pitched the realtor, and they pitched the seller, and they're intrigued by a lease option, but I actually really want to do a sub 2. Besides saying I will pay you more for sub 2 or something else, are there any other, benefits to the seller that I should pitch now that I've got them intrigued, at least with creative finance?
Is this a property that's been sitting on market for a while?
Just came on.
Just the what?
It just came on, but it's overpriced.
I would probably just wait it out and see what happens. I think that's one of the biggest mistakes a lot of people have, or they involve their feelings into their investments, right? So I would just let them feel the pain for a while, because I don't know about everybody else, but I think overall in a lot of states markets are shit. I don't know if that's the answer you wanted to hear, but I'm more of like, let them feel the pain for a while. Then it'll sound intriguing to them. Because again, for me, some people, lease option might work, but like for me, I wouldn't bite on it. I'd be like, no, I need complete ownership. Oh, and what is it? If something that I learned a while ago, because I remember someone was talking about underwriting and stuff. This is mainly specifically for creative stuff. But if you're looking at a property and you're wondering if it's a good deal or not, so what I was always taught, like this is like just quick math in your head, right? If your PITI doesn't have at minimum a $500 spread between the PITI and fair market rent, that deal is shit. So just in case if you're on a phone call and you get all this information, you yourself know, is there that spread there? And if it's not, then $500 spread between PITI and fair market rent. Yeah. Any other questions?
Do you have any cool creative ways where a seller can sell sub 2 or seller finance and still 1031?
So I feel like that would really depend on how much their money they're getting at closing. So I've done where they use their 1031 funds into buying a property. Is that what you're talking about, or are you talking about selling?
Selling. So if the seller's going to sell to me, for example, sub 2, they want to go 1031 after.
Well, that really depends on how much money you give them, right? Because if you're only giving them 10K at close, that's not really a lot of money for them to move around with.
I guess I'd more see it in seller finance cases, not sub two, where it might be more a larger down payment that they can do something with, but they're not getting full proceeds.
And again, I think it depends if they have an investment lined up already. If they have an investment lined up already, I think it just really depends on how much money you're putting down, because that's the money they're using to invest. But again, if you're giving them 15K at close, it's not a lot of movement for them. But wait, hold on. If they did have a shit ton of equity in their property, that's probably where I would end up pitching them a Morby method. But then again, it would depend, like if you're giving them 40% or whatever, like is that enough money for them to use to actually go invest with?
Wait, you just said something. What's a Morby method?
So I'm pretty sure there's other labels to it, but you know I first heard it from Pace. But it's pretty much you're doing a cash buy is really what it comes down to. And depending on how you negotiate with the seller, they're pretty much giving you, so how could I do this? So if, all right, I'm gonna use 100K as the purchase price, just to keep it real clean. And they're willing to take 40% at close. There's a 60% remaining, right? But when you're doing a Morby method, at least with the contracts you're using, you're technically doing two transactions. It's a cash purchase and on the front end, and on the second transaction you're doing a seller finance. Ultimately that's probably the simplest way to break it down, but if you're buying it for 100K, the seller's walking away with 40K. I'm not going to include closing costs or anything just so I can keep everything clean. But if you have 100K purchase price, 40K to the seller, there's 60K remaining, right? Say you bring in a DSCR lender, and I know this probably isn't possible anymore, but say they're willing to give you 80%, right? So you get 80%, you bring in your other 20% to fill the gap, right? So when closing actually happens, you have escrow instructions to the escrow company. You might have to open multiple, what do you call it? Escrow, what is it? You might have to work with 2 different title companies, but ultimately what you're doing is once the first transaction actually closes, the seller gets their 40K, there's 60K remaining, right? 20K or 60K remaining. That's technically supposed to be seller finance and then attached as a second position. There's other ways people do it, but this is probably what's been taught the most. But you take the 60K and you attach it as a 60K lien on the property, second position lien. So now what you have is you have your original 20K back, and then you have an additional 40K. I'm gonna say it should go to reserves. You shouldn't go buy a new car. It should go into like a savings reserves account, fix up the house or whatnot. But when you do it this way, your house is over leveraged now.
So I'm just curious on that Morby method, why wouldn't you just do one closing with the seller in second position carrying back the equity?
This would be a very big way. When you guys hear no money out of pocket, you're literally coming no money out of pocket. The gap funds that you put up, that comes back to you with an additional 40K on top. So you're kind of, how I kind of look at it is you're not only getting paid at close, but now you have your war chest already built, or renovations costs. Does that answer it? What was she like?
He said no money down and second off the equity.
Yeah, because what he's describing is a structure where we're bringing in a lender in first position, a DSCR lender, and then we're putting the seller in second position. But in order to get to that, it's going through a one close to make that transaction happen. I know it's kind of confusing, but you've done all kinds of ones like that, actually. You've actually done better structures than that one. Okay, do we have any, it's 5 o'clock now, do we have any follow-up questions? Mike's gonna be here, you can come up, you can ask, if you're afraid to ask a question right now, you want to come up after, you can hit Mike up here in a minute and talk to some of the other ones, but can we give Mike a big round of applause? Oh my God, Mike, you crushed it, thank you so much.
Thank you.
That's awesome, dude. Okay, so we also want to